Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, October the 12th. The year's 2021. Let's talk trading. Where to begin, part 2. This video is for educational purposes only. Your results may differ from mine. Yesterday, where to begin? I started that series, and I talked about the TRO Einstein line, where it just puts a couple of horizontal lines on the chart, depending on when you load up the chart. And it basically gives you a trigger. And I had another trader contact me via email asking me, where to start and what indicators to use. So I'm going to continue on this topic. So I've got one indicator, TRO HL5 here. The rest of them aren't germane to this discussion. So what are we looking at with this indicator? In this case, I've got it set so it will show the open, the high, and the low for today and for yesterday. Now, what you can do is you come in here and you select high, low, and open. Now, you can come down and you want 2 bars, and you want the period is daily. Now, I think there's one other thing I can do here. I think if I do this, can't remember. Yeah. So the current lines are colored and the previous lines are grayed out. So as you can see right now, on the pound, it's 1 pip above the previous day's low. And if you notice, you can look here and see all the action around these lines. We've got the daily open, the previous day's open, previous day's low. Look at the action. Of course, we had some action off the current day's low after it put in and came down and tested it a second time. So basically, you wait for price to get near those lines, and then you trade accordingly. I've got this set right now on H1, but of course, if you want to, you could drop it down to the 5-minute chart, and you can see here there was a signal to go short at the daily open. There's a signal to go short here at the previous day's low, and we're getting another one right here to go short at the previous day's low. And once again, you trade with candle color at the line. And in fact, when you're using these lines, you can actually trade off the daily. Just use the daily candle color at the line, and usually it'll pay off for you. Now, does it pay off every time? Of course not. Somebody will say, oh, well, you can get whipsawed. Yes, you can. But that's true of any trade. So I don't know why they bring that up. But they like to for some strange reason. But the point is that you can keep it simple. Just trade with the candle color at the line. And remember to have your stop loss in place. And when you learn how to trade like this, then any other method will pretty much come easy, because it's going to be based on entering at a level, and that's what we're doing here. We're entering at a level. In this case, we're using the previous days and the current days open, high, and low. And if you wonder why I don't have the close, because the previous day's close and the current day's open are usually within about a pip of each other, and it would just have the lines crushing on top, with the exception of Friday to Sunday / Monday, when you have the open gap. So, where to begin? Begin with simple things such as this. It's not hard to do. I mean, you just, load the indicator up, very simple, and you just follow price at the line. You don't have to think about it. You just execute. You've already done your risk management, so you don't have to think about that. So basically, you just wait for your signal, take your signal, and see if the market smiles upon you. Either it does or it doesn't. Oh, and there's one other thing you might want to do. I think I showed you this, another indicator, display decimals. So we know we're 1 point or almost 2 pips below. So you could have made a quick scalp there for 2 pips. And once again, if you have any questions, feel free to post them out in YouTube land or over on Crestlick. Okay, so risk management, make sure you have that in place. Looking at the monthly chart, we're 110 pips over the open on the pound dollar. On the weekly, all the gaps have filled. We're 30 pips below the weekly open. And what's interesting here is that yesterday's low is the low of the opening range for the week. We are still in the opening range for the year right here. And we dipped into the opening range for the month and came back out. So you can see the overlap here. And let's see. Let's just look at a couple other pairs here. The euro broke out of the range. Its opening range for the week and the opening range for the month. Let's see. Dollar yen out of its opening range for the week. So these are just, once again, highs and lows. Simple trade, just like the one I showed you before. But you can do this. Look for these levels as you go through the week. And we're 58 pips below that yearly open. You can see we had a high of 36.37 today. Got close to the yearly open, but just couldn't clear it. And it looks like you can see the pounds kind of channeling here, ranging, however you want to call it. Inside bar, we went outside of the monthly inside bar low right here. We're below it by 18 pips. And the monthly inside bar high is way up here, 374 pips away. Today, only 3 pairs over 100 in range, pound clocking in at 69. And if you notice, this is the same chart I showed you, the other one, but without the dashboard. But it just goes to show you only need a few lines. You don't need any fancy formulas. And so long as you have good money management and the market smiles upon you, you should be able to walk away with some pips. But remember, sometimes you got to take it really quick. I mean, you might be up 1.7 pips and the next thing you know, you're down 0.5. So, and sometimes it'll flash and you don't even get a chance to take it. So that's just something to be aware of. If you're trading like this and you're trading for quick profit, you got to be quick. Now, if you're more, say, a support resistance or a supply demand type trader, you might come down here and say, okay, well, here's where I want to go long and here's where I want to go short. And there'll be some days you won't even put a trade on, but that's just trading. Okay, moving on to the buy zone. You see we crossed that weekly open a few times here, but we're now below it. We took out the pivot, which was above the weekly open. And you can see here we're right in, coming out of the short zone right now. And the daily open here at 35.94, price crossed below that again. And it just seems like we might want to put in a red day. And we're right at the edge of the rat zone. And this is the weekly lower rat zone right now. Could go lower tomorrow, but right now this is the weekly lower rat zone. And a lot of times pairs will peak either or bottom out on Tuesday, Wednesday. So they can do that on any day of the week, but just something to be aware of when you run the statistics. In fact, I'm working on an indicator that picks the day of the month by the date and see if there's any statistical edge waiting for a certain day. It's seeming like somewhere between the last, well, not the last 5 days, but maybe the 5 days prior to that. So like maybe the third week of the month is when it seems like months are putting in highs and lows. But that's not always the case. Just statistics. Okay, pivot trading plan, price at or near the pivot point, bias is short. That was a good call today because it crossed it twice but couldn't close above it on the H4. Let's see on H1. Let's see, we had one close above it on H1. So we hit the pivot daily, we hit the pivot weekly, and we hit the pivot monthly. So far this month, we have one missed pivot, 35.20, and one from last month at 37.61. In and out of the wick zone here. There wasn't much of a body on yesterday's candle, daily candle that is. So a lot of time in the wick zone, but price doesn't like staying in the wick zone, and it's leaving the wick zone. On the higher low, lower high scalping setup, you can see here it's just been a steady move down. And in fact, I want to show the gauge. Because I made that modification and I put a video out about it. And I actually made another one today, so I'll have to do another video. But the resistance breakout, support breakout. So this is the number of pips since this level. So from here down to here, see 17 pips. And what I've learned is you want to wait for at least 10, but 15's even nicer. So you can see here at 10 pips, that level, you could have taken a trade and made a couple of pips. So here, same thing. And then down here, well, this trade's about to happen. So that's how to use this indicator. You want this number to be 15 or higher when it breaks out. And the other way to trade it is if you know that it's breaking out, you can put your, like here, you can put your short on, and of course have your stop loss in place and just wait to see how far down it pushes. And that's just another way to trade it. So, fellow traders, I hope that helps you figure out where to begin when you're talking about trading. Because it's not what you trade, it's how you trade it. So go out there and drain the banks. Remember to subscribe, smash the like button, and this is TheRumpledOne, over and out. Drain the banks.